Hello, and welcome to the second installment of Taylor White's Market Overview series. I'm Justin Jocelyn, Finance Manager here at Taylor White, and today we're going to take a look at the labor force from a macro perspective, compare it to prior quarters' presentations, and drill down to the key factors that are impacting the current supply and demand imbalance for accounting and financial professionals. And today we'll be covering the JOLTS survey and the unemployment rate, both for the professional business sector. This is data provided to us by the Bureau of Labor Statistics. And then we're going to take a look at the labor force participation rate. This will be total US, so a really big macro picture here. What we'll be focusing on is the quarter over quarter change in that percentage and perhaps a potential for a rebound. Then we're going to take a look at the trends in the quits, which are voluntary separations, updates on what we're seeing and hearing from the largest job boards out there, and then a picture of what the future might look like. Starting off here with the JOLT survey, job openings are actually down 5% quarter over quarter for the professional sector, but it's really not all due to an increase in hiring. In fact, new hires are down 10% quarter over quarter, and separations are up 6%. Now, typically, we can kind of split hairs here and say that December is not the most popular month for onboarding new employees or bringing people into your company right around the holidays. It's typically a slower time for hiring. So these numbers shouldn't be taken too much out of context, but it is important to understand that the openings overall being down are not because people are being hired. The unemployment rate was down slightly, about 0.7%, but largely unchanged and remains at historic lows. So as we start talking into the next slide about labor force participation, just start to think about the unemployment rate going down, labor force participation rate going up. That doesn't necessarily mean that from that large macro view of the labor force participation, that the people that are re-entering the labor force are all accountants and auditors, etc. This is the labor force participation rate ending at the fourth quarter of 2021. What we did see here is a very slight increase of 0.2%. Again, total US, all sectors, not drilled down to the accounting sector here. But given the 14-year trend, this could really just be a reversion to the mean of the overall decline that we've seen since the Great Recession. But there still could be a short-term upside as more people are coming into the labor force overall. So what we typically see is when organizations are either building or they're in hyper growth mode, a lot of the labor that gets hired is pre-accounting and finance. So the good thing here is that there could be an uptrend and a swing of people coming back into the market as these jobs really do need to be there in order for the organization to grow. Another interesting trend here, when we start to really focus on people coming back into the labor force, we got to start to talk about either people that are leaving the labor force or are starting to shop around their careers and their positions and their resumes, etc. What we did see here is that in November, we peaked on as much data as is available here going back a little over 20 years, is that we had 800,000 people voluntarily leave their positions in the professional and business services sector. Again, the highest that we've seen on record. You can see here on the right side of this chart here that really it drastically went down right at the beginning of COVID. Nobody was voluntarily, again, this is voluntarily leaving their positions in the midst of a pandemic. But as we start to see the pandemic kind of wane or level out, or at the very least get out of the media headlines, we're getting back into that upwards trend here that we've really seen again since the Great Recession. Expect this really to continue as the leverage continues to shift more towards the employees here. Again, we'll talk a little bit more about this later in the job board slides, but definitely expect this trend to continue. And speaking of the job board slides, we're going to take a look here at CareerBuilder supply and demand analytics tools, and that measures the job openings versus the amount of active candidates on the platforms. So that blue line up top there represents the current job openings for a senior accountant with a bachelor's degree and at least 2+ years of experience. And that green line represents active candidates on their platform that meet that criteria. To be an active candidate, all you really have to do is log in and browse through jobs. You don't even have to apply to a job to be considered for this statistic. So it's really important to kind of look at it as somebody who might be just browsing around, seeing what's out there, looking to move on, right? So what we saw is that through January, we did see a slight improvement in this ratio, whereas pre-pandemic, there was one active qualified candidate to 3 job openings. Again, this is drilled down super micro here with the senior accountant example. Last time we met, that was one active candidate to every 19 job openings, and that was in October of 2021. And as of recent, in January of 2022, that was one active candidate to 10 job postings. And that's not really necessarily to say that, as the previous slide explained, that we've seen a down tick in the amount of job openings. That's kind of recent, again, going into the December timeline here. What we noticed in January that ratio has improved, and it's the first time we've seen any improvement in a while. So it's important to think about that might be an early sign in the trend here that people might be more active in coming into the market. But also as the amount of jobs increase, we're going to need that active candidate to be there to really make this ratio more of what we saw pre-pandemic. Now we're going to take a quick look at some data provided to us by Indeed. This information is open to everyone. You can just Google Hiring Labs Indeed, and they usually have really good articles on what they're seeing on their platform, etc. So I can't recommend them enough. It's just a really good source, to get the pulse of the market. And so when we ask ourselves, what are employers doing to attract talent, especially with the waning candidate pool here, you kind of have to make yourself as attractive as possible, right? So what Indeed has noticed is that remote and hybrid terms are continuing to be part of the new normal. So if we look at that graph, right around pre-pandemic, it was about 3% or sub 3% of all job postings had remote or hybrid terms in them. And we can see that number is now 9.1% at the end of Q4 of 2021. So a really big drastic shift here into what employers are doing or offering employees to attract the talent, but also to retain the talent. It's definitely becoming a trend as far as remote and hybrid, and it's something that Taylor White has noticed too. With the very least, most job openings are offering hybrid terms. Now to end the presentation, we kind of wanted to take a moment and look at what does the future look like here, or what can we expect going forward for at least the next 4 to 5 years. I stumbled upon this article by the CPA Journal in September of 2020, so a little bit dated information, but realistically, if anything, it's probably worse. The name of the article is Accounting Education at a Crossroads, and there is a link there at the bottom left. And if you need to reach out to the Taylor White team, we'd be more than happy to provide the link, as I'm sure it's in pretty small text down there. But what was interesting is that James Madison University saw a decrease in the accounting enrollment of 34% from years 2015 to 2019. And you can see by that table to the left there, they based it off of intermediate accounting 1 and 2 and the enrollment process therein. But when the professor who came up with this information, he wanted to reach out to a lot of large institutions. And I really do encourage you to read the article because there's a lot of really good information in there. But a lot of the major institutions around the United States, 76% of them responded in a noticeable decrease in enrollment numbers when surveyed. So really, he tried to look into, what was the reasons for the decline here. But overall, I think big picture is that we're going to have a lot of fewer graduates coming out of college interested in accounting or finance careers, which really even takes that candidate pool and shrinks it even more, especially as we look to the future. But the next slide, we're going to go over just a couple of the reasons why when these large institutions were surveyed as to the decline in the enrollment. And when the professor for James Madison reached out to the other larger institutions and what factors have led to the decrease, the number one factor was a strong job market for other majors that don't require 150 credit hours. Not something anybody's going to be able to change, at least on our side. But the other ones that are really interesting were the emergence of tech-related majors that are, have appealed to the growing number of students. Think computer science, coding, software, database management, etc. But also one of the more important ones, I think that is something that we do have the ability to influence is starting salaries for entry-level accountants has really remained stagnant. So, you're thinking about coming out of college now, especially, saddled with debt, etc. You want that position that, can at least afford you the ability to pay that debt off, or, to buy your first home, etc. And a lot of the goals, especially with the recent inflation, etc., just aren't as obtainable as they once were. And a Master's of Accounting program, again, going back to cost-related issues, is prohibitive for students. But some of the other mentions were there seems to be less of an on-campus presence here from recruiters, etc., which, again, this is going back to 2019, so this was even pre-pandemic, really, when all these surveys were done. So I'm sure that number has gone down to virtually zero. So there's probably not a lot of advertising or other ways that we can draw college students into the profession. So as we look forward here, it's just important to really remember that there's a lot of factors currently impacting the candidate pool or the possible candidates that we have to draw from here. Just something that we really need to think about going forward, and what our expectations are for the year 2022, and honestly probably till the year about 2025, as hopefully the cycle for getting accounting and finance professionals back into this market will be greater. But I would just always like to mention that you can visit us at taylorwhite.com, and you can always reach out to one of our recruiters for any of your hiring needs. Thank you for watching.